What's up, guys? I'm Tim with Nomad Trading. Thanks for stopping by. If you're new here, welcome. Welcome to the Beehive. Thanks for stopping in. I'm Tim. I'm not a guru. I'm not a multi-millionaire trading prodigy. Just a guy who's been doing it for a few years that can help you cut the learning curve down. Don't forget to hit that like and subscribe button, if for nothing else than because you like my fluffy quarantine hair. I think the thing I miss the most about new quarantine life is the barber shops. I really need a haircut. I'm ready to get this mop trimmed down. Anyway, today we're going to talk about the hottest stock of the day, which was WORX, WORX. That's the one that most day traders were jumping in and out of, a big mover. A lot of volume and volatility. I think I'm going to try to do these more often, kind of cover the hottest stock of the day and some possible entry and exit points, because people seem to be wanting to know how to find the stock that most people are trading, and then what to look for in an entry point and an exit point, profit spots, things like that. So we're going to cover that today on WORX. I'm going to jump over to my trading platform now, and we'll get started. Here we are, all warm and cozy inside my computer. We're in my trading platform now. This is WORX. This was the hottest stock of the day, definitely, as far as day traders go. It's traded almost 96 million shares. You can see that up here. What we're looking at now is the daily chart. So you can see that it's definitely a breakout. It was trading way down here in the 2s and 3s, and now, as of right now, it's up almost to $12. Let's look at the news that came out. I always glance at the news. I like stocks that have news if possible. I will buy a breakout on a stock without news, but I'm just a lot less likely to. The news helps it be strong, and you don't want to be buying a breakout that gets stuffed and goes right back down. And that happens a lot more commonly when the stock doesn't have news and it's just a technical breakout. Sometimes it'll get the attention of shorts and people that'll pile on it, and without the news to give it some strength, it can get stuffed and taken right back down. So the breakouts just work a lot better when there's some kind of news backing it up. This was a coronavirus play. We can make this a little bit bigger. I don't trade completely based on the news, but I like to have some kind of news. I won't put a ton of stock in the news, but I do look at it. So this had more than tripled in value Monday morning after the company reported a large order for COVID-19 testing units. So then if you look down here, let's see, it closed last Thursday at 225, so it's up a ton. Looks like Virtual Healthcare Network had ordered 2 million COVID-19 rapid testing units, with the possibility of an additional 2 million units ordered every week for 23 weeks. So this could be a multi-day runner. I wouldn't be surprised to see it be a multi-day runner, but also you got to watch for offerings. I'm always nervous. I've talked about it in other videos, but always nervous holding overnight because of the potential for offerings. You get a company like this that's been trading down in the 2s, and all of a sudden it's up at $11.77 as of now, and was all the way to $15 earlier today. It's very tempting for any company to see that and, hey, we're up 400%, 500%. It's a good time to go to the banks and try to get some money. Try to do an offering, dilute your shares, and raise money. So you got to watch out for that after hours and pre-market tomorrow. But assuming that doesn't happen, I wouldn't be surprised if this ended up being a runner, just because it's up on the hot topic right now, which is coronavirus and COVID-19. Anything that has to do with that is definitely the hot sector at the moment. So the fact that they got a pretty big deal, and then it talks about ordering another 2 million units possibly for the next 23 weeks every week, that's a pretty big catalyst that could cause this to keep running. So it's definitely on watch for tomorrow to see what happens. Anyway, so we got the news. That's what we're looking for. The first thing I would do if I were looking at this over on my scanner over here If it had popped up this morning, which it did, I would have clicked on it just like right now. BIOC is popping up. That was another big one today also. It traded 145 million shares, but it's a super cheap stock at 50 cents roughly. So it's not quite as popular as the WORX was. But it was probably the other big one that I saw a lot of people trading. But anyway, if I were to click on it over here, it would have popped up. And then I would have seen that it was getting a lot of volume. People were playing it pre-market. So I would have brought it to a bigger screen, which is what I did. So this is what I would have been looking at. This is the end of the day. So you're looking at the entire day from pre-market here, where it shot up on that news from 265 all the way to, looks like it almost touched $10 before it came back down. That's just crazy. You want to know why I love trading stocks, guys? There it is right there. You just can't, how could you not love that? How could you not get excited about that? You know, why, if you're clocking in and out to a job that you don't like, it's hard to see something like this and not get excited that, hey, you know, I could work from home and just pull money out of my computer. And you see things moving like this from $2.65 to $10 in a matter of minutes. You're talking like 8 o'clock to 8:08, 8:07. So 7 minutes or so, this thing goes from under $3 to $10. It's just crazy, guys. That's why I love it. That's why I love the stock market. It's just crazy. So anyway, what I would have been looking at, I would not have been, typically I'm not buying this first spike because you don't know. You can't see all this whenever you're here in the morning pre-market. You don't know if it's going to stop at 4 or 5 or 6. So it's, you know, it's risky. You feel like you're chasing, if you're me, or you feel like you're chasing this thing if you start buying it on this first rocket ship up. So what I like to do is buy the breakout when it's confirmed. So I would have been watching this, it came back down, and at this point you're panicking because if you happen to chase it, and this is why I don't chase the initial run up, if you happen to buy it somewhere in here and it starts fading right away, you're panicking because you don't know at this point here if this is going all the way back down to 2 or 3, which many stocks do. Many of these low float, low price stocks will come right back down to earth. So you're panicking as this is fading back down. That's why typically I will wait for confirmation of a breakout. Ideally, it would have come down and then it would have curled back up right here and tested the high of day, and I would have been buying it there as it broke the pre-market high. In this case, it faded down, ended up watching it, and it kind of formed a little bit of a cup and handle, but not a true cup and handle, but more of a ABCD pattern. You get your A and your B and your C and then your D as it comes back up. So it's a pretty typical pattern that it's probably the first pattern that most traders learn. And then you're wanting to buy it as it breaks that level there. Me personally, I buy whenever it breaks this because it kind of showed some resistance here, faded back down towards VWAP, and then as it curled back up, I would have been buying it here at that 830, 840 range as it broke that. And then I probably would have been selling as it got up here to the high of day, the pre-market high, because that's where you're going to see resistance. That would have been a place I would have either taken some profit and then held the rest as it went up, or I would have gotten out of it completely just under the pre-market high and then waited to see, and if it looked like it was strong on the level 2, looking to break that level right there. So you can see that right here as it approached $10, and right over here you can see that volume came in, nice strong green candle. That would have been another good place to buy or jump back in. If I had gotten out right there, I'd be jumping right back in. And then typically buying that break of $10, I personally don't hold stocks very, very often for more than $1. If it goes up $1, I'd consider that a win, and I take that profit. So I would have been looking around $11 to get back out. And then as you can see, it did drop fast. And that's the thing that's scary about these low float stocks that are moving with a lot of volatility. That thing, this candle right here from 1138 or so down to 1032, you're talking a dollar drop on one candle, one minute candle. It dropped a dollar. So it can be pretty scary if you think about, you bought 1,000 shares and in 1 minute you just lost $1,000 and you're sitting there praying that it comes back up. And that's why these things are very risky, and you got to play them very safe. That's why I usually buy in what I consider to be the safest points. It would have been a good short right here, but as I've talked about in previous videos, it's really hard to find shares to short, these low float momentum stocks. I can almost never find shares to short. I know that there are brokers that have them, and the more accounts you have at different brokers, the better chance you have of finding shares to short. But anyway, it would have been a nice fade back down here. Anyway, so I'd be looking to buy this break right here, sell at about $1 profit. If you get greedy, you can end up getting caught, just like I'm sure many people did right here. And then if you're watching the RSI down here, you can see that it's getting a little bit overbought in that range, so you don't want to be chasing it too hard. And then it comes back down and corrects. Another place to buy would be as it breaks right here. You got your high of day right here at, let's see, it would have been about 1175, and then it curls back up. And as it breaks that with nice, strong volume, big green candle, that's where you want to be buying. You got your finger on the button right there, and anticipating as it winds up, anticipating the break, the high of day break, and right as it looks to be strong, you want to be watching your level 2. Make sure you're seeing a lot of green prints going through, a lot of size, people hitting the ask. And then as it looks strong, as volume comes in right here, and you can see the volume down here was strong on those green candles, that's where you're buying it right away, and you got to be quick. You're buying that break right there, 1175, and then it gave you plenty of time to get out here because you can hold it for $1. A dollar gain would have been 1275, which would have been right in here. So you got plenty of time to get out. You could even ride it higher. Just don't get greedy because, like I said, this is a big drop, and if you get greedy, you got this big drop. And turns out the stock, climbed and was fairly strong throughout the afternoon, so you would have had lots of spots to get out. But you never know when that's going to happen. You never know when this drop is going to turn into a VWAP test and be down here testing VWAP or the 200 moving average, or breaking that worst case scenario and coming back down. I can't tell you how many times I've seen stocks like this come all the way back down. So you don't want to be holding and hoping. It's best to buy when it's strong, take your profit and get out, and then just watch it. And then it'll come down, end up coming down and testing the 200. This is why I like to have the 200 moving average on my screen. You'll see stocks quite a bit come and react to that. So it got a nice bounce there. I might have bought that. Sometimes I'll buy stocks that are testing the 200 or VWAP for a little bounce, but I don't hold those very long because you might just get a very small. In this case, it's moving so quickly that you could get a decent bounce because you could take it at this support right here. That's another thing, guys. So you want to know when the stock, you're always trying to predict what the stock's going to do. That's the idea of trading, right? So if this is up here and you're thinking it's going to start to pull back, you're always wondering, where's it going to pull back to? Okay, well, a pretty good possibility would be this high of day. It'll pull back to that, which is exactly what it did. And then it bounces off that level, goes sideways for a bit. I would never be buying in this situation here when it's going sideways, guys, because it's just a coin toss on whether or not it's going to go up more or pull back more. So don't buy those coin tosses. Don't buy when it's moving sideways like that. Wait till you get the breakout, you get the confirmation of strength. Again, here it comes back down and you're wondering where's it going to bounce at. Okay, well, it's getting close to that 200. It had some support right here whenever it pulled back at this point, right there at that high of day. So you got all that support. Okay, it pulls back to that, and away we go back off of that. And I've talked about in other videos about how it's a self-fulfilling prophecy, and these levels of support and resistance are support and resistance because when the stock's trading 100 million shares in a day. There's a lot of people like you and me, and we're all thinking the same thing. Where's it going to bounce at? Okay, a high of day would be a good spot. So people are thinking that, and you get enough people that are like-minded thinking the same thing, and they buy that, or shorts cover at that point, and then you get the bounce just like you expect. Same thing here, and you get the bounce. But you always want to be careful, because stocks will do the same thing a couple times, but typically you won't see it 3, 4, 5 times. So whenever this is pulling back, it did end up working out here. So, it's not that good of an example, because it kind of came to that level and then bounced again. But you can see it gets weaker and weaker, and you don't want to be buying, looking for a bounce on the second or third time that it tests that support level, especially in the afternoon on fading volume. So not something. And again, at this point, we're going into the close. So not something I'd be buying there into the close for a bounce or to hold overnight, because it's closing weak. When you're looking for stocks to hold overnight, you typically want it to close strong, close at the high of day. Even then, it's risky, like I said. But if you do have to hold something overnight, you're looking for something that's got a lot of volume that is closing strong. And this one, for instance, did not. It ended up selling into the close. And as you can see, it's kind of just unwound throughout after hours. This is after hours. It's getting a lot of volume after hours, still moving, still a lot of people buying and selling it, but not something I would be looking to hold. It's very possible, like I said earlier, that this is a continuation tomorrow. It's definitely the one that I'll be watching. It'll be on my top of my watch list for the morning pre-market to see what happens, because it could continue on with the news and the catalyst and the strength that it had today. Very possible that it's a runner tomorrow. I like it for a lot of reasons, and so do other traders. There's a reason it's traded almost 100 million shares. If you look at the daily chart, when you first start looking at the stock, one of the first things that I would do would be to look at the news, and then I would look at the daily chart to see where resistance is, because you want to know what your profit targets are, and you don't want to be buying a stock just underneath a resistance point where it's going to get rejected. You want it to have room. And this is just a textbook stock with room to go, because as you can see, if you go back even 1 year, this is right now the daily chart for 1 year. There's no resistance anywhere. The nearest point would have been just under $8 right here. So as you can see, it blew past that. Nothing but blue sky ahead, as I like to say. So there's tons of room to run, and that's why it did run today. There's just nothing really that people are going to be looking at as a level of resistance or a level for shorts to pile on. So it keeps going. It's kind of one of those things that just lines up, whenever you're going to have a stock like this. It's usually when all the factors line up, when you got a low float stock and you got the right news in the right category, the hot sector, as they say. And then on top of that, got nothing but blue sky up above it, no resistance points, nothing standing out that is a place that people are going to start selling. And then you get the volume on top of it. If everything lines up just like that, you can get a stock that goes from less than $3 to $15 at one point. So there's so many different places you can take entries and exits on the stock. I used to try to hold stocks all day, like I would have back when I first started learning, or even a year ago. I used to try to buy that break, and then I would try to hold it. And, that is great. If you nail that, you can make a ton of money. But the thing is, so many times I'd buy it, and it would go up like this, and I wouldn't take the profit. I'd be holding it, and then it would end up coming right back down and fading all day, and I'd be looking at a loss on a stock that I was up considerably on at one point. So the name of the game now, to me, to stay consistently profitable, is always to just take really small moves, little small pieces of the move. So now I'm just looking to buy the breakout when it's confirmed and when it has strength, and then I'm just looking to get out. In this case, with $1, I'd be happy with $1. Get out of that, 1,000 shares, get $1 out, then just look for the next point at which it breaks that high of day, grab another little handful of shares, get right back out. And this is why the PDT rule can be a real pain in the ass, because if you're under the PDT rule, it's hard to get in and out of stocks over and over again, because then real quick you run out of trades. And that, that's just a bitch. But there's ways around it. There's offshore brokers like CMEG. You can use your spouse's name to open an account, and then you can get 6 trades a week at the bigger brokers that are here in the U.S. There's ways around it. You can look up a number of YouTube videos about ways around it. None of them are that great. I mean, to me, the best option is probably going with an offshore broker like CMEG. But the downside is you're going to pay commissions. So if you've only got a $1,000 account, you don't really know what you're doing. Yeah, you can trade a bunch more, but you're also going to be paying commissions. Whereas with like Etrade or something like that, the bigger brokers right now have free commissions. So with everything, there's a downside. You pay a little more for the offshore broker, but you get to trade a lot more. That's probably what I would do if I were starting out. And I like CMEG even now. So, but anyway, commissions can eat you up, so just be aware of that. There's been years where I paid like $7,000 in commissions alone before E-Trade had free commissions. But anyway, that's about all I got, guys. If you have any questions, put them in the comments. Any comments, things that you think I can improve on or that you want to see, things I can do better, just go ahead and leave them in the comments. I would love to hear your feedback. I'm always looking to improve. I'm very new to this, obviously, to the YouTube world, so bear with me as we learn together. But anyway, glad I can help in any way, so shoot me a comment. I'll always reply back. Thanks for watching. Thanks for stopping by. Let trading set you free. Peace.